I believe everyone can see my screen, right? So once again, welcome to Tradersearn Academy. Today we'll be talking about a topic very important, very important, though most people don't really take it as important as it is because of some other advanced theory they have learned. But I've come to realize that this is the bedrock of every other what's it called now? Is the bedrock of every other theory that you can ever learn on how to chart, how to analyze any financial assets. This is the bedrock of it. And the topic is what I called support and resistance. It's what I called support and resistance. Very essential. My network is very poor. I don't know. Okay, here we are. Let me remove all this. Let me try and remove everything here. Okay, yeah, the chart is clean now. Okay, now this is Euro USD charts, and I want to be using it to explain a topic called support and resistance. Without wasting much of our time, most people here already know what support and resistances are. I'll just go straight to their significance, what they mean. Excuse me. Now, when they say support, this is what support simply means. Excuse me. Okay, let's say this is the price of Euro USD now. Let's say as it's at this current price and it starts rising up, then it rises to a particular level, let's say here, and it's reverse. Now, this particular level that it gets to and reverse, we call that, we'll say there's a resistance here because it was going up and it could not go up any longer. So that place that it gets to and refuse to keep going up, which is this point now, that place I get to and it refuse to go up, we say there is what a resistance in that place. So you get it. So we can say resistance is the price. We can say resistance. We can simply say resistance. Resistance is the price. Is the price and assets achieve. And assets achieve and could no longer keep increase, but instead decline. So resistance is the price an asset achieve and could not keep increasing, but instead what it declined. I hope that is clear enough. So that is exactly what happened here. So now, if the price keep going down like this and get to a point again, let's say get to a point here and now reverse something like this, the reverse at somewhere at this place, so we'll say there's a support here. There's a support at this level. Did you get that? There's a support at this level. That means as the price was coming down, it get to a particular point, it could not keep going down, like something support it. Maybe let's assume an object is falling from a ceiling, from the top of a house or a building. Then as it was going down, something just give it some support to avoid it from falling. So that level is where we call support level, and we have it also in this scenario. The price was coming down. Then it gets to this particular area and it could not go down anymore. So we say it find support here. So now that is just what support and resistances are. This is resistance here. This is resistance here. That's not what I want to pick. This is resistance here. This is resistance here. These points that as the price got to and could not keep going up is where the resistance is. And on the other hand, on the flip side, this is resistance. Sorry, this is support now. Support. Now, this is the point the price gets to and could not keep going down. And instead, what? It's reversed. Now, this support line and resistance line, you cannot, this support price and resistance price, you just know that price found resistance here and found support here. You can't actually make use of it yet. Now, for you to make use of it, you just wait and allow price to come back to it. So let's say this price keep going up like this and get to this point. Again, that exact point, that exact point that it's reversed from here. That exact point reversed from here. It's not reversing from it again. If it's reversing from it again, we can now call this place, this resistance is a verified resistance. We can now say this is, or let me call it a speculative, some people call it speculative resistance. Speculative resistance. Don't worry, I will still explain the psychology behind this to everybody. But for now, just follow me. Now, on this second touch, we can now call it a what? A speculative resistance. Now, just follow me. Now, let's assume price now begin to go down again and get to the exact level we got to the other time and reverse, and it get there again and do something like this, and do something like this, and do something like this. So we can now call this place also a speculative support. Speculative support. Am I making sense? Is anybody following? Please, if you are following, just signify using the chat box as I continue. So now we have already gotten our level of resistance now. Now this is the key. We wait for the price to come back to it. We wait for the price to come to any of these places. We wait for the price to either go up to the resistance. If the price go up to the resistance, we can easily expect that the price will also still make a U-turn. We can use that to predict that the price will make a U-turn, because this is the first instant it happened. When price got to the exact level, it's reverse, come back to it again, reverse. Then when it comes to the third time, we can easily predict that it's going to reverse again and say something like this. Is that taken? So that is one. Then on the other hand, it can as well come down to this place, since it has price have been respecting that level that's respected it 2 times. If you come here the third time, you can expect that it will now come from here. Do you understand? So we can easily predict a buy from this place. Something like this. Is that taken now? Okay. Now, before I proceed, let me explain the psychology behind. Let me explain the psychology behind the support and resistance. I'm a farmer, okay? Now let's assume this year This year we sold a rice of bag, bag of rice for, let's say, 40k. You understand? 40k. Then the following year, this is the highest price bag of rice got to this year. This is the highest price. Please, who is somebody just okay? So bag of rice this year is 40k. That's the highest level we got to. Now the following year again, also got to 40k. You understand? Also got to 40k. Also got to 40k. Now the year after that, let's say it got to like 38k. 38k before it fell. Now, if a new rice farmer now want to sell his products, you can easily ask the old farmers that, okay, what is the price, highest level of price rice gets to before it start declining? So you know that when rice is scarce, when rain is going, and the farm produce are getting scarce, that's when price goes up according to law of demand and supply. Now, somebody that does not have any idea about this market, when he wants to sell his rice, he will go and ask the experienced traders, the experienced farmers. They will tell him that the highest price rice here to is 40k, meaning that once you go to the market and you see that price of bag of rice is 40k, then sell immediately. If you refuse to sell that time, it will start going down. And that's exactly what we have in this place. Now, let's assume this Euro USD now is the rice of bag I'm talking about here. Where is this guy? And the current price now of the rice of bag, this is the price here. So first year, it gets to 1.28510, it decline. The second year, get to 1.28510, it decline. If we achieve it the third year as an experienced trader, immediately you see the price at 1.28510, you'll be expecting that it will still decline again, because history always repeats itself. So you expect it to decline again. So you understand? And as it's declining, when it gets to a particular level that it always gets to and starts rising, let's say the first year it gets to this level, which is, see the price here, which is 1.26027. It get there, it pumps up, it comes to it again the second time, it will pumps up. If you get to this level the third time, what will you start doing? You start buying, because you know this is the cheapest price you can get it. So you understand? Now, since everybody has already known that from the statistics and the data, everybody has already known that once the price gets to this point, or let's say to this area, not this point now, not this exact value now, let's just say this entire area like this, once price gets to the place, that's where it gets to, and it doesn't go up anymore. So once the price gets to this place, everybody will start selling what they have in stock. You understand? Everybody, let's say you have bought the rice when it was very cheap and the price was going up. When you get to this point, you'll be looking to sell. So there'll be a lot of people looking to sell at this area, right? So we call this area of supply. We call it supply zone. We call that place supply zone. Supply zone. That means a lot of people have that commodity and they want to sell off at this area. So since everybody are bringing out their rice or whatever it is to sell off at this point, that means there's a lot of sellers here, and that make this place a supply zone. On the other hand, this is the price where everybody wants to buy at, and that makes it the demand zone. So when we say zone means not a particular price, but a level, like a range of price. That means it may it may not get to this exact 1.2609 and it may pass it by a bit. She understands. So that's just to explain that area where there are a lot of people wanting to sell is where we have where we call supply zone. An area where a lot of people wanting to buy, so we call what? Demand zone. So this is just what we mean by support and resistance. Support is the level where price gets to and could not keep going down. Is the level where price dropped to and could not keep going down. And once price has tested a particular level 2 times, we can now put our line on it, our horizontal line on it, expecting the price to come to the third time. Once the price gets to the third time, we can easily predict that what is going to pump. That's one scenario. Now, there are some scenario whereby instead of the price to get to, for example, let's say this resistance now, and reject something like this, to not reject, to just pump up like this. To just what? To just pump up. Instead of it to reject, to just what? Pump. To just break it and keep going up. This kind of scenario, we call it breakout. Breakout. That's resistance breakout. We call it what? Breakout. This other one here, we call this one rejection. We'll call this one what? Rejection. So that is to tell us that when a price approach a resistance level, we are expecting 2 things to occur. We are expecting price to either pump or decline. We are expecting it to either reject like this or pump like this. Either of the two will happen at this zone. And the third scenario that can happen is choppy. It can be chopping around it like this, just be going like this. But at the end of the day, one will win. So either it goes up or it comes down. Now, you all know that your job as a forex trader is to predict price movements, to predict where the price is going. If you are clicking on buy on your MetaTrader 4 or 5, which one you are using, anyone you are using, you are seeing that the price will go up. And if you are clicking on sell, you are seeing the price will go down. If your prediction is right, you make profits. If your prediction is wrong, you make losses. That's how it is. Now that brings us to how to trade this support and resistance zone. Now there are different ways to trade it. There are a lot of ways to trade it, but one of the ways I enjoy is just to trade it, to look at it as game of probability. Game of probability. And that is what forex is. Forex is a game of what? Game of probability. There's nothing that is 100% sure. If anyone tells you that they have a strategy that works 100%, they are lying to you. Nothing works 100%. You can only have something that works 70%, 65%, 80%, but nothing works 100% of the time. You understand? So forex trading is a game of what? Game of probability. Now, when the price approaches a level, let's say support level that you have recognized, the price approaches it, what you'll be expecting is either you see something like this, or you see something like this. Either of these two can happen. Now, in whichever one is the case, you learn how to trade it. Now, if the price is approaching this resistance level, what you just do is fold your arms or set an alert. If you are using TradingView, you just set an alert. All you have to do is just to right click. If you are using the computer version, you right click and you click on, and you see something here, add an alert. So you just add an alert somewhere here, close to it. I don't know, you may not be able to, I don't know if free version can create alerts. I'm using the premium version. I'm using the premium version, so I don't know, but you should be able to do it on free version too. So there will be an alert here. Once price approach it and price hits this place, it will alert you. So you open your phone or your system or whatever you are browsing with or whatever you are analyzing with and be watching it. Now, once the price hits this level, bam, there are two ways to trade it. There are some people who call them, there is a strategy, there's a way to enter that we call aggressive trading. Aggressive traders or entries. Okay, let me see. Aggressive entry. Now, if you want to do aggressive entry, that means you are not seeing it as a game of probability anymore. You are seeing it as maybe you have some other confluence. There's something we call confluence in forex. So you have other confluence that this area price is going to reject. You can easily place your sell order, your limits order, sell order on this level. Then you put your stop loss above it, maybe somewhere here. Then your take profits under, like this. You can trade it that way. And another way to do it is to wait. That's conservative way to do it. Wait for a kind of reaction here. You allow the price to come down a bit. Maybe you see the next candle, immediately the price it is down. You see the kind of next candle that will form. Most of the time at this level, you'll be expecting to see a reversal candle pattern. We have different type of reversal candle. We have the pin bar. We have the pin bar. We have the evening star, the morning star, a lot of them. So you'll be waiting to see a kind of reaction here so that you'll be very sure. Let's say as the price hits the line, it now form something like a candle that looks like this, like inverted hammer, something like this. It forms something like this at this level here. So you have an extra confluence because this is a reversal candle pattern. This shows you that sellers are here pushing the price down because this candle was a full candle before. Then seller came in and push it down like this. So that's telling you that this is a reversal candle. So if this kind of candle forms here, you can now place your trade after the formation of this candle. Sometimes it can be a bearish engulfing candle. Bearish engulfing candle used to be like this, something like this, where this will be a red candle, this will be a green candle. So you'll be looking for those kind of formation here. So when you see them, then you now place your what? Your shorts. Then your stop loss will be above the rejection candle. Is that checking? Am I communicating? Who is following me? We'll go to live examples. I pray time permits us. If time does not, then we'll continue tomorrow. Finish it up because we need to do live example. Is anyone following me? Please, if you are following me, just use the chat box. Okay. All right. Thank you. Let me proceed. Now, on the other hand, using the same methodology, if it is buy you want to do, then you wait for the price to hit the demand zone or the support. You can just enter buy direct from here. You just enter long, put your limit order here, and immediately hit it. Your price, your what's it called now? Your trade executes. But this is what we call aggressive entry. I will still talk about the advantage and disadvantage of them both now after this. So, or you can wait for something like this. It will now form. It will be inverted. It will be the real hammer. This week will be here, and this shorter one will be at the top. So you'll be looking for that kind of candlestick here before you enter your trade. Do you understand? Before you now enter your trade. So immediately you see a reversal candle. If you don't know about candlestick, we have a video on candlestick. Yes, we have a video on candlestick. Just go to the group chat. You will see link there to watch it, so you can watch it, you understand what reversal candlesticks are, so you'll be able to apply them. Now, before I go into live examples, there's one more thing I would like to talk about. Now, there's something we call SR flip and RS flip. There's something we call SR flip. There's something we call, let me use RS flip first. RS flip and SR flip. Now I will explain this term for you. I will explain this term now. Okay, let me start with RS flip first. Now let's say we have our level of resistance here. Let's say this is resistance. This is resistance. This is resistance. We have resistance here, and price approach this resistance. Price approach it, and instead of rejecting, it did not reject. Let's say reject the first instance. Then the second time now broke it through. Now, if the price break it like this and come back to it, most of the time when price break resistance, it always come back to it. Now, on coming back to it, the line turns towards support. It turns towards support when its resistance level line is broken like this, and price comes back to it, turn to support. So this same line that is resistance here can turn to support here, because price has already broken it. So when price breaks it, it changes to support, and I will be looking for a kind of long like this. Who get this concept? Who got it? So this is exactly what I'm saying. When a resistance line is being broken from here and price come back to it, it's flipped towards to support. And on the other hand, I wish I can turn this thing around. On the other hand, if a support is being broken, let's say we have a support here, the price comes to it like this, bounce off, then come back to it again. When price now come to it, it turns towards the resistance. Now I've changed where the price is coming from. Hope that will not cause confusion. Let me not do that, so that will not cause confusion. Let me just move this here and this here. So price is coming from up like this, find support here, comes back, then breaks it. That support will now turn towards resistance if the price is going back to it, or we'll now see something like that. Is that taken now? So this is what we call SR flip, when its support is being broken and now turned to resistance. So we call it RS flip. RS flip. Now there are different ways to trade this also, but we have also two ways to trade it majorly. You can if you understand the concepts very well, you can build your own strategy around it. Nobody's right or wrong in this market. In as far your strategy is making you money, then it's correct. That's just it. Okay. Now let's see how to trade it. If price I come to resistance level like this and come down, reject it, breaks it out and come back to it. Now on getting back to it, you have two ways of entry. In fact, you have three ways of entering this one. Three ways. We have aggressive entry, we have conservative entry, and we have very conservative entry. I will explain them. Now, aggressive entry is Immediately the price breaks out like this, just set your pending order. If you don't know about pending order, you have a video about it, so just look for it and read it and watch it. So you just set your pending order on this level direct. You just set your pending order and you aim for the top, something like this. So once the price come back to this level, it automatically open a buy signal order for you and start going up. That is it. Then the conservative method is when you wait for a reaction at this level, you wait for price to react to this level, you wait for price to react to this level, something like this. So you look for what candle this is. After the price hits it, what happens next? Does the price reverse? Is there any reaction? Is there a reversal? Does the price keep going down? You want to see what happens first before you enter. So immediately it is, then you'll be looking for a reversal candlestick, maybe an hammer or a bullish engulfing candle. So once you see that, that's where you open your buy. You understand? And for the very conservative one, you wait for break of structure. Wait for break of structure here. There's something we call break of structure, but because I've not taught market structure, it may not be easy to understand, but just take it anyhow you get it. You wait for a break of structure here. We call this place break of structure. Now, why do we call it break of structure? When market is going on an uptrend, it makes series of higher high, higher low, higher high, higher low, higher high, higher low. So you can wait for this, for a new high to be made. When price gets to this point, that's where you long. That's where you buy. You can do that. So you buy at this point when price is breaking this high here to form a higher high. So that is it. That's one way to do it. And on the flip side of it, you just invert it. That will be the flip side of it. This resistance here and this support here. So price is coming to a support like this, then it bounce, come back and break it. Now when it retests it, this place now is what is now serving as what as resistance. So you are expecting the price to reverse and go down. Now there are 3 ways to enter also, just like we have for the other one. It's either you just place your short signal, your short pending order. If you don't know about pending order, please refer to our videos. We have a video on pending order. So you come down. So immediately the price it is like this. You activate your account, your trade. Now the other way is you wait for a reaction, a rejection candlestick here. Like you can have inverted amount, you can have bearish engulfing, you can have evening star. You understand here. So when you see, that's where you enter. Or if you are very, very conservative trader, you can wait for a new low to be made, because on downtrend, price will be making low, high, low, lower high, lower low, lower high. Then you wait for it to form a lower low before you enter your trade and you trade down. That's very conservative style of entry. Now, please let me sound this warning. Don't open your chart and start trading because of this alone. You are going to get wrecked. There's something called confluence. You must have 1, 2, 3 reasons for entry trade. All right, I'm going to end the class now because this is an unpaid version of Zoom class. So I'll end it now. Then we'll start again in a second. Please don't go anywhere. And on the group chats, that's where I will drop the new link. See you on the next one.